With me now to talk more about what we are seeing in the currency markets and with the dollars, Wells Fargo's head of currency strategist, Nick Bennenbroek. Nick is a Bloomberg best on the currency markets. So you just hear Ron Paul, right? I mean, he's sort of saying over and over again, essentially what he's been saying is that we're debasing the dollar. Are we or not here?
Well, I mean, we're certainly running a very easy monetary policy, and the economy isn't performing well. So
we've been doing that, though, but it's accelerated, Nick.
Right, and the Federal Reserve is doing what it can to try and support the economy. I wouldn't say they're debasing it, but certainly the dollar is a reflection of the economy at this point, and the decline in the dollar that we've seen over the last several months is just a reflection of the economy and the policies that are being adopted.
What do you make of the dollar's movement in the wake of what we saw yesterday with the disorder in the equity market?
Well, it's very interesting, and there's two really opposite effects that are going on here. There's the impact of the downgrade. You know, will that cause yields to go higher? Will that cause pressure on the dollar? And that's sort of the direct impact. But
you're talking about Treasury yields,
I'm talking about Treasury yields. But actually, the Treasury market still seems to be functioning okay. I mean, there's still demand for Treasuries. People are not losing wholesale confidence. So really, the impact on the dollar is the indirect effect on confidence, the volatility that we're seeing in markets. And actually, as a result, really, we're seeing some safe haven support for the dollar, and it's not as damaging for the dollar as one might expect.
Is this the movement that you would have expected? What were you expecting, Nick?
Well, it was probably a little counterintuitive. And when we look at some of the previous experiences of countries going from AAA to AA+, usually we see some modest weakness in the dollar. So it's probably a little surprising. But again, if we get this volatility to continue, and we probably will, I think, for the next few weeks, I don't think we're going to see dollar losses. If anything, we're going to see some dollar strength against the commodity and emerging currencies.
Intervention?
I think we'll probably get that, because along with the dollar, the Swiss franc and the Japanese yen are going to be the other currencies that are going to face upward pressure as well. And certainly, I don't think we're going to see the Swiss act once and pull back. I don't think we're going to see the Japanese act once and pull back as well. I think that if there is further upward pressure, we would expect further action in terms of intervention.
But let me get this straight, though. You don't expect it coming out of the Fed, though. There would be no reason, right?
No, I don't think the Fed will intervene. You know, at most, I don't even know if they'll adjust their monetary policy at this point. There's a lot of talk about today's Fed meeting. They'll probably, again, maybe just talk about the extended period, maybe some guidance of the language going out further, but it is pretty early for them to adjust at this point.
I'm glad you bring that up, because, you know, what we've been talking about on this program and over the last several days is just how much equity markets have become so sensitive to every single headline, right? Every single data point. Have you seen the same with the dollar?
I think so. I mean, the dollar's always been sensitive, but yeah, I mean, it's definitely reacting more probably to the equity markets than even to the data points at this particular point in time. It's reacting to Europe, what's happening with the Italian bond yields. It's reacting to the equities, the huge 6% slump yesterday, the equity futures being up 2% today. So all markets are very sensitive at this point in time. It makes it hard to assess the underlying trend.
Europe, Nick, you know, we've seen more and more pressure, right? Do you think that the chances of a breakup of the euro have strengthened or risen over the last several months, given, you know, now you've got the ECB coming in and intervening, actually buying government bonds?
Well, it's undeniable, but the chances have increased slightly, but they're still extremely marginal in my opinion. You know, we might have been talking about a 1% chance previously. Now we're talking about maybe a 4 or 5% chance. At the end of the day, effectively, I don't believe that the euro is going to break up, but clearly the risk is very slightly higher than it was previously.
What could tip that higher?
I think, again, you need to see this ECB action being ineffective in terms of Italian bond yields, and right now it is being effective. Who knows how long it's going to last, but you know, beyond this, there's more fiscal and monetary policy maneuver that can be made.
Right. Always a concern is that the central bankers don't have enough arsenal, really, to counteract what's going on in the markets. But Nick, great to see you. Thanks for stopping by here at the New York Stock Exchange. I was Nick Bennenbroek, the head of currency strategy for Wells Fargo.